everyone to Silver Asset of the Day and also today's Q&A as well. So the first question in fact today comes from Eduardo, and that's with regard to the current trend on gold and whether we are going to get to 1,600 US dollars per ounce. If you consider where we are at the moment, and gold currently is trading at $1,450 and we're getting towards the end of November, the typical flow of gold from now until the end of the year into January and February is certainly range bound at the moment. So we're expecting range bound price action for this week. Usually as we get into mid-December, we do see another dip in price, particularly on the week of the FOMC statement, where we also have the European Central Bank announcement with Christine Lagarde as well, and then we have the UK election as well. So typically the low is formed around that mid-December period, and then we start to build up momentum from approximately the 18th of December onwards. And usually January and February are the strongest months of the year for the precious metals. So that's really where you want to watch out for the potential if we do get supported around these current levels at 1450, or if we're going to dip down slightly lower, you want to then look for the potential as we go into January and February to break back towards 1500. And of course, if we can take out the previous swing high, which resides just above $1,550 per ounce for gold. In fact, it's approximately 1,557. If we break above those levels going into January and February, then really the next magnetic level for gold is going to be 1600. And of course, from the current prices right now, that's a $150 move for gold, or over 1,500 points to the upside, which is very attractive. So it's definitely worth keeping an eye on gold at these levels, particularly as we go into mid-December. So again, more range-bound price action expected for this week, potentially a final low as we go into mid-December. But if we don't dip lower and we hold around these current prices, look for that price action to really pick up momentum at the end of December and into January. That's typically what we see from a cycle point of view. Now, the next question today is from Jenny. That's with regard to silver, what we're looking at here for the gold-silver ratio. So the gold-silver ratio has in fact started to break down a little bit again today. It's broken back down to 86 to 1, and silver right now is trading at $16.90 per ounce. I do like these levels for the longer term. Ultimately, I'm looking, of course, for a breakout back above $17 and back towards that recent swing high of $18.30. Again, normally from a cycle point of view, gold does outperform silver between now and the end of the year, and silver lags and then picks up momentum going into January and February. So really, I'm looking to capitalize on this potential upward swing in gold from mid-December through to the end of the year, and then we'll start looking at opportunities to move some of that profit into silver and other metals like platinum, for example. As I mentioned, platinum, we banked 800 points over 2 trades last week. Our palladium trade, in fact, is currently up approximately 1,000 points from where we entered a couple of weeks back. And really, I would keep a very close eye on the gold to silver ratio, which is suggesting in the short term, gold's going to outperform silver, but ultimately going to January and February, I am expecting silver to get back towards those swing highs of $18 and start to really make a move back towards the previous highs over 2019 as well. The final question today comes from Lucas, and that's with regard to the holidays that we have at the end of this week. So we essentially have on Thursday, we have Thanksgiving in the US, and then Friday as well is going to be another holiday in the USA. So certainly you do tend to see exaggerated moves in the markets. In fact, gold, silver, crude oil, they will all be closing earlier on Thursday and Friday. So the price action that we get this week is likely to be a bit more muted than usual in the lead up to those US holidays later on this week. But also at the same time, sometimes this lower liquidity in the markets can actually cause those bigger moves. So I wouldn't take your eye off the ball here with gold and silver. I'll still be watching them very closely during the US holidays later on in the week. Just bear in mind that they will close earlier. So any trades that you take on the metals or the energies, they need to be executed earlier on in the day before the markets close for the US holidays. So with that, that's been Silver Asset of the Day in today's Q&A. Thank you again for all of your questions. And of course, we wish you good trading.